The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 163. Whoops, just moved up 184 at 25,149. S&P is up 25 at 2729. Composite is up 67 at 7,277. VIX is finally down. It's at the 17.10 level. I said to subscribers on my opening call this morning, if the VIX starts to fall and it goes towards the 16s where the 9-period exponential moving average is, that'll go back to what we normally see in huge moves to the upside that start to fail in the volatility index. This time it's taking a lot longer, but if it was holding closer to the 19s, that would say, uh-oh, be careful. So right now it's down at 17. That's a good sign. We've got the E-mini, you can see right here, up 17, actually up 18 at 27, 29, 25. Let me explain something to you. These sound like huge moves, and under other circumstances, these would be one-day moves almost. But no, we were having these as intraday moves, but this is nothing. Let me show you something in the daily chart on the left here of the E-mini. Weekly chart is in the middle. Monthly, this is a 120-minute chart on the right. Remember, for the E-minis, I like to just show these shorter time frames. What we're looking at is these are very small candles when you compare them to the huge candles, especially after the big drop that we had at the beginning of February, end of January, beginning of February. So I always have to think of this. I always chuckle when I think of it because it takes me back quite a few years to when I was a kid, a teenager, sitting at the table with my parents and my brother, and I would take the knife and I'd put it flat on the table with the handle going out, extending over the table, right? And then I would go ding, and I'd make it oscillate. I'd go, press it down, and then it would spring back and forth, ding, like that, right? And then all of a sudden it slows down. That oscillation is exactly what I like to look at. Remember, I spoke about the internal low and the residual low. And sometimes the residual low can be lower than the original low. Think earthquake and aftershock. Sometimes that it could be above, and sometimes it hit it just about exactly. And this is what I'm thinking, oscillation. So now we're in this oscillation phase where the amplitude changes completely. It starts to shrink. Now we're getting back to what I would call a normalization of the market. It's walking the 9-period exponential moving average, the black line there, this moving average at 2709. We're at 2727 right now. And basically what we're looking at is there's a triangle formation with lower lows and higher highs coming to an apex. You can see it magnified in the 120-minute chart. Now, a lot of people tend to think that if you break the vibration, as it narrows, going to this apex, after the oscillations start to get smaller, that once you break to the upside, you've begun actually a much bigger oscillation, and you're gonna target the upside. I say no. This is just merely a reference point of previous highs. I tend to treat longer-term trend lines as just something of interest. Sometimes it hits it exactly, sometimes it misses. But what's really important is what chart formation are you looking at if you break above 2731, that peak A that was made at 2 o'clock on the 22nd yesterday, before that very sharp pullback. Remember, we're up over 300 points, and all of a sudden you were down, then you closed quite nicely, but having had quite a spill intraday. So I'm looking at this, I'm saying, hey, 120-minute chart is walking the 9-period moving average. The MACD is still very strong. The histogram's improving, although it's starting to weaken a tad. It's still very strong. The stochastic is at 75%. I like it at 85%, 80% or higher. So this is where you start to see resistance. And all it's saying is this trend line is now going to become some kind of support, and it coincides exactly with 27.21, the 9-period moving average in the 120-minute bar. If there is a close later today, all of a sudden give back the gains. I don't think it'll give back much, but if it does, that's the level to watch, 27.21 on the E-mini. What's really important, talking about the breakout pattern of the downtrend line, in the Dow, you'll see that we hit it, we're bumping up against it right now on the daily chart. That's the Chapman wave falling axe formation. This is my CD book introducing the Chapman wave methodology. This is the falling axe formation, a declining, expanding cone. And that is in chapter, I believe, chapter 24, around about slide 391. And we still remain long. We had 2 long positions. We're trying to get a second one, but we didn't get it. So getting back the second one that we took a nice profit in. So we're long from the second day after the low was made, and that gives us a little bit of a comfort factor. Now let's go to some other parameters. What we want to look at is if you're looking at the SPX.X, the S&P, walking the 9-period moving average, hasn't even taken out yesterday's high of 27.31.26. Today's high is 27.29.94. Days young, we see what can happen there. But once again, you've got your trend line. See, what's so fantastic about learning these patterns, I've been asked so many times, maybe it's time to make a little booklet, not a book, but a booklet of these patterns and how to trade the patterns, because it's really important to understand what you're dealing with and how you can deal with it in the best way possible. So that's what I'm thinking right now. In the meantime, back at the ranch, what we're looking at, the S&P needs to break above the candle, the high of the 21st of February at 27.47.75. So that's the way to go. It's 20 points to go. And then I'll say that is really good action. Meantime, if you look at the weekly charts, what I wanted to mention on the Dow, if you look at the Dow and the S&P, the weekly chart is still horribly negative at this particular point. The QQQ series, this is the Power Shares QQQ Trust. It's making, let me just show you, the monthly chart is really strong. Weekly chart is okay. I mean, it's really actually quite weak, but the price is good. So there's a divergence between the technicals and the price. And it's still way under the 170.95 high at 166.64, up $1.84. It has broken its downtrend falling axe formation. And that imparts to me that if there are certain parameters that are hit, you could even have a 1-to-1, which is 150 to say 164. You could double that from the low, so that's 14 points. You could go from right over here, 14 points to the upside. Whew, that'll take you to 178. I don't even want to talk about that yet until there's a decisive movement. It has to have speed and velocity to the upside. You've got to take out 167.22, the high of the 21st. You've got to do it by Monday or Tuesday. If it doesn't, I'm going to say, hey, that's good action. The QQQs could go to the all-time highs. That'll be very positive, help the other indices. If you look at the IWM right now up $1.02, 153 lagging, holding the 9-period moving average. Technicals are improving, but the price really should be at 156, and it's 153 right now. Weekly chart is not very good. Monthly chart is it's good, but you got to watch it close. I'll be back. We'll talk about gold, talk about the dollar, talk about the euro, talk about the yen, talk about crude oil and bonds. Basil Chapman.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Because this is Nestle chocolate, and what I said is maybe you should have a little nibble at this particular price of 80.96. The monthly chart, if it's going to be an inside bar, you have to see it start to move from 80.96 about a point or so up. And I'd say 1.2 resistance, 1.5, to 2 points of some kind of a cushioning right now. Make it just under the 79 low, so 79.40, make it 73. 73, it's actually 3 points. Now make it 73.80. And just start a position, just to start a position. Why? Because this particular pattern says that the stochastic and MACD are starting to improve. It's trying to get above the 9-period moving average. The weekly chart has a green candle for the first time. And it says, you know what? I'm going to maybe test the base, but if I don't even go close to 80 in the next 2 days, and in fact, I can try for the 81.50 area, I might have made some kind of a turn. That's all I can say. I know that the person who asked has a longer-term perspective, and I would put this in the camp that says, as a counter to what's going on in the general markets, maybe this kind of almost defensive stock, having had obviously disappointing news, gone from the 87, 88 area down to the 67, 68 area, I think it's ready for at least 70. 79, 80 area is at least ready for a bounce, and that will at least initiate a move. Give it just a little bit of room, that's all. And as it moves up, I would actually put the stop above the low that was made 3 days ago. That's the best way to do it. Okay, so now what we're looking at is, if you're looking at gold, and this is going to be very interesting because gold is down $1.08. It was down a little bit more earlier. It's at 1330. Let's call it 1331. It needs to push above 1337 to really show that it's got bounce material here. If by Tuesday it hasn't been able to get even to the 1335 area, but instead pulls back underneath 1327, 1325 cushion. I'll say, nope, not ready for prime time yet. But I am looking at patterns in certain gold stocks. This is one that we sometimes buy, but I usually use it more as a benchmark. It's a South African gold. It's really like a fund. It has, I think, 5 South African stocks. It's in the Bermudas. I think that's where the head office is. But what I really am looking at is this arch formation in so many stocks. Let me go to, I think Royal Gold would be a good one to go to. RGL, Royal Gold is RGLD, trading at 82.68. See, same pattern except much higher price. But this has got a nice high level consolidation in the monthly chart. This is going to be very interesting. If by Tuesday or Wednesday next week, RGLD is closer to 80.50. It's at 82.67 right now, up 19 cents. If it's closer to 82.50, then 83.90, maybe 84.10, I would say to you this consolidation is going to go on a lot longer. If, in fact, it moves up towards the 83s and the dollar is unable to push higher than it's been, and the dollar right now is up 11 cents, holding very nicely in the second arch formation. Remember, this is the one that I talk about. A lowercase h can go to a lowercase m and continue this way for quite a while. That's what I think the dollar's in. It's in a bounce that says I'm trading in a narrow range, trying to form a base, and that base is probably going to have to be retested at 88.44 at some point. It's at 89.88 right now. And that's going to help gold if it pulls back and gold responds. I don't want to see dollar pull back and gold does nothing. That's really not good. Now, I want to look at the, so that's going down, EUR USD. Of course, that's the euro dollar currency pair. There's got a peak D attached to it. And the way it's looking technically, I think it's going to test the 1.223 level. It's at 1.229, down just a fraction. Can't get over the 9-period moving average, making the second of a cup formation. This one looks a lot weaker to me, and I think that it's going to go lower. If you look at the USD JPY, which is, of course, the yen, it's also got this crazy pattern that looks like it's like gold. This one should be doing much better, the yen, and it's not. And that's just saying to me that money is kind of finding a home elsewhere. It's not finding the so-called inverse formality of going to gold. Even if I look at Bitcoin, if I can look at the GBTC, this is the fund. It's pulled back. Now it's up at 68 cents at 70.61. I'm considering that it's making a little bit of a consolidation here. I think that I think money's starting to find different places as a home. And as a result, you've got a market, and I'm now even more convinced. I'll do a lot of work for my subscribers to my opening call. If you want to sign up, this is a perfect time. We've raised some cash, starting to look at new positions, new long positions. I'll be looking at short positions very soon. But if you look at this particular pattern, I drew it in, the arch formation. This is the daily chart of the Dow, goes to a potential lowercase m or a larger arch. And what's really important about this, we've just been stuck between the red and the black. This is the red is the 20-period exponential moving average. The black is the 9-period exponential moving average. And we've kind of been trading about just above it. And we've gone to a 60% retracement if you're looking at Fibonacci levels. And what's really important about this is that in the context of looking at the retracement levels, we went to a 618 exactly, pulled back. Now we're between the 50 and the 61% level. I think that there's a little bit of internal strength as the MACD is trying its best to close positive on the day. That'll help the weekly chart. But look at this. This is lousy action until we can really spike and get into the 25,500s. This is just a bounce. It doesn't look more than a bounce, a good bounce, but a bounce nevertheless. I want to see higher highs and higher lows. And in the Chapman wave, we need a Chapman wave 5 about 25,432, which would take us to peak C. That could extend a little bit, or that's peak B is where you've got to be careful for that arch formation. So I'm watching this closely. And you look at the trend line. The trend line couldn't break out. MACD histogram is still negative. It's about to turn. Whoa. It just turned positive. It's a 1.17. First time you've got that close. To make it, well, it's not a close. We've got to wait for the end of the day. But the MACD is good. It's better, and the stochastic is at 56 still ready. It needs to be at 68, somewhere around there. So I'm looking at diverse signals, and I'm just saying to you, this action right now, in a way, is kind of pathetic. I would much rather have a trend down and a trend up in the sideways trading range, because what happens is, unless you pick the exact low and try to trade it to the upper level, you're starting to buy the almost breakouts which fail. Makes it very difficult now for entry points. So let's go back here. I want you to look at the TLT. So if you're looking at the TLT, this is the Lehman 20-year T-bond fund, up 97 cents at 118.06. This is the MACD's just about across positive. Histograms turn 0-0. The first time we've gotten to zero in for months. And what's really important about this, stochastic is still flat at 12%. That's not good. You can't have the MACD turn up and the stochastic's flat. That tells me that the TBT in leg D, in a peak D actually, is going to be the clue. That if the TBT at 38.83, this is the inverse Lehman T-bond fund, if it takes out 38 support, that's going to be really good for yields. We'll look at the yield chart in a moment. Here it is. Leg C in the weekly chart of the 30-year, leg D in the 10-year, and leg D in the 5-year. And I think next week we're going to see lower rates just for a short period. Basil Chapman, Basil 148. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. I had a question about ZTS, which is Zootis Inc. Zootis Inc. Not sure what they do. and I'm going to do this. I looked at this ages ago, and I loved the name. I love the name because I had to keep thinking, well, what on earth is a Zootis? But I never followed it as a stock. And I'm upset because look at this. It's walked the 9-period moving average. It's done fantastically. Just in the last year, the last 2 years, it's just a spectacular move from the 38s to the 82s. And let's see. I wrote it in incorrectly. It's Z, not an X. Here we go, Zootis. I did it again. Oh, I see what I'm doing. I'm hitting the wrong letter. Zootis. Zootis, a global health company dedicated to supporting customers and their businesses in ever better. Oh, I have to tell you, the question is, Zootis, where was the first question? That was, Sack says in the den. Folks, try the den out. You got the rest of the month free. It's just really worth it. Great information gets passed through every day. Basil, can you please look at ZTS? Is it time to get out? Absolutely not. It's not time to get out. But I tell you what I will do, because you've just asked the question. When you start to ask the question, I say to you, wait a minute. You obviously have been thinking about this for a few days. In the few days you're thinking about it, it's already gone up another couple of points. That's a bonus. And it's in leg C. Oops, I nearly did that incorrectly because I was doing it so quickly. 77.04, ho. It's in leg D. Now it's a good question. What I'm going to say to you, Sat, is that, look, you've just got a bonus. It's on your mind to say, wow, this is kind of extended. I would have thought that when it plunged from the 80 level down to the 70-ish level, that was a 10%, that was a 12% correction, that maybe that was it, and all of a sudden gets good news, gaps up, and continues higher. I'm going to suggest two things. One is when I have something like this, I do this for my subscribers, I say, as a swing trade or as a shorter-term trade, this is a great time to take something off. I'm going to say to you, because it's gone even more points higher than I suspect you were thinking it would, why don't you take off? I don't want to tell you proportions because that's really a very personal thing. I don't know how much you have. I'm going to say take some off that makes you feel like you've rewarded yourself, number one, for a fabulous, not a trade, but a position play. And number two is keep enough that you can keep a core position, have a second position that's a larger intermediate term trading position. Why? Because the monthly chart looks spectacular. I've got an alternate account, G/C. I have no reason to think that it's a G. Looks more like a C. Monthly, the weeklies in leg D. There I can see that maybe it's getting a little toppy. But as a core position, I suspect if you can keep a core and have something that you take off right now, because you want to reward yourself and you want to say, hey, it could go higher, but this is where I want money management. I want to get something out of it for all my hard work, even if it was just putting the trade on and watching it and doing nothing else. And then I would have, for the middle position, I would say, you know what? If it comes back at any point in the next month and it takes out the gap low, that was on the 15th where there must have been news and it gaps up, from the 74s, it opens at 75.75. If there's a pullback and it gets anywhere between just above the gap in the 76s or just in the middle of the gap in the 75.50 area, text me or email me or do what you just did, and let's look at it again. That's where I would say maybe now it's going to start to pull back towards that 70 level. So why not take a little bit more off with that one you want to put back? So take a little off now if you're asking me the question. Right now on the up move, I'd take something off. I would keep my core position, and I'd have a trading position that says, you know what, as a larger term trade, not the very core position that I hope to hold even longer, but that intermediate term one, I'm going to be watching the levels. If it pulls back, in fact, if it pulls back under the 9 EMA of 78, let's look at it again. I might even say, hey, this is where you want to add back the piece you took off. Or I might say, don't add back. Even start to lighten up more. That's where I'm going to start looking at it and saying, aha, how's it going to pull back? ZTS trading at 82.10, up $1.34, looks great. So Technical Friday, I want to spend a little time and just to prove it to myself, let's see where the 120-minute chart is. It's in A, B, C, D, and it's gone to an E, and the technicals are weakening a little bit. I think it's a fabulous looking stock. Very short term. If you've had it for long term, maybe you shouldn't even be listening to me now, but on a very short term, I would definitely take something off because that's the way it looks. Couple of questions. Sellers of the VIX calls, 321, expiring S&P correction, S&P correction, off table until the 21st of March. Yeah, you know, I've been looking at that. I haven't been looking at the calls. I've just been watching the action. And I suspect if I'm correct about the internal low and waiting for some kind of a news-related residual low, which could be lower, it could be a little higher, it could be, but either way, it'll be maybe somewhere in this area, maybe below 20, maybe 24,600 area. It makes another more serious low, and that's where we really take off, or that's where it breaks down. I'm saying you could be right. We could even go another 3 to 4 weeks sideways to higher, but it definitely, I'm looking at this and I'm saying the Dow cannot break 24,000. Don't want to do it off the top of my head. 24,000 Dow INDU. Yes, 24,500 is sacrosanct. It closes under that, and you've got yourself a completely different, very negative pattern, at least for a little while. Okay, next question is Dow 61.8 Fib retracement, neutral. Oh, the question this person asked was, what's our position? My position is this. We managed to get a couple, we're only in the one now, long positions in the Dow, just off the low. It was about 1,000 points off the low, but I mean, that was still pretty darn good. But that gives me room to think. And my thinking hasn't changed over the past 3 days. My thinking has been that the evidence, without breaking into the 25,500s at this particular point, says sideways consolidation should continue. Could make slightly higher highs, but it's going to get more difficult. And the rotation saying you cannot keep rotating into each sector to see if it's going to work. The home builders have been pummeled. I suspect they're ready for a little bit of a bounce. So we'll see next week. The third week off the low is a week that I said is going to be something to watch. Let's go to Scott in Safety Harbor. Scott, how are you?
Fantastic. Having fun doing a very tight range on GE, but
right.
Perplexed by the, I've been stopped out 5 times on the VMC, the Vulcan Materials. I do 1,000 shares, so it's not a lot of money when I've gotten stopped out, but still it's just, the only thing that I can see is the infrastructure people were all excited about gets stalled by these
yeah. So let me just tell you this first of all. The H pattern that's unfolding in VMC, which is Vulcan Materials, says to me that we still got to think of this as in a sense, when I say it's your kind of stock, what you really want to be doing, we've got a break coming up. You want to get close to the most recent left side low. That's where your risk reward is best. So let's just talk about that in terms of VMC. We'll be right back. Dow's giving back some. It's up 152. We'll be right back.
If you'd like to get my daily newsletter, Market Insights, now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, folks, let me get to a couple of questions here. Boeing hit 361.35 on the 1st of February. It pulled back pretty sharply to 320. You know, a lot of these stocks had 15 to 22, 23% declines in that very short pullback, late January to February the 9th. Some made lows on the 7th. So what we're looking at here is that Boeing is bumping up against very strong. Think of a roof. You know, Tom O'Brien always likes to talk about the roof, try to bump up against the roof. So that's something you got to be careful of. Now, I'm going back to Scott, because I wanted to show him the reason why I brought this up is that Boeing has the inverse on the top side of what VMC has on the bottom. And that's what you got to kind of recognize. See, if I invert that H pattern was like a Y pattern in Boeing. So now what we're looking at is Boeing has to break through that very strong resistance, and Vulcan has to try to hold that support that was made at 119. I better type that in, 119.34. So what I'm thinking here, Scott, I don't think this is not your type of stock at this particular point. What I'm thinking is that when it made that H pattern, spike to the 134 level, that was a big move, and then it comes straight down. That's showing that rally was an emotional one. It was built on news or some event that was supposed to happen that didn't happen. Now comes the real test. This can be a very negative pattern, or it could become a very positive pattern. And that would say to me that I'd have a little patience here, see if you can wait for 120 or into the 119s, and then you want to see if it bounces off. That bounce has to be quite strong. If it can bounce and get to the 125 period anytime next week, that 125 level anytime next week, I think you've got yourself a stock here that's going to give you those exact. You like to get in near the lows and to just get in after a bounce. And that's really what this.
Well, I also like my insurance too, and it's kind of like the VIX. People used to laugh at me. I had a long time ago. I told you I bought 200 of the VIX, and people it's going lower, and then it went up $20. But anyway, Vulcan. Eventually it'll go up, so I like to have that security, even though I use tight stops. And I keep mentioning that on the radio because people I know listen to your show, and they listen to me, and I say
tight stops for sure.
They won't put in stops.
You have to
I don't know what they're thinking. You can go out there. It's like being able to go to Vegas and bet $100,000 and only lose $1,000. I mean,
so
but
I wanted to
why they don't do it, I don't know. But a quick question about GE. What do you feel is going on with GE? I'm in a range now of like 80 cents is where I go back
I
and
don't
forth.
think you're going to do much more than that for a little while, and until GE can go into the 15.83 area and then move very quickly from 1883 to about 1637. I think it's stuck in the range. So right now what you're doing, just getting in and out, treat it that way. I'm just a little nervous that GE has the potential for one little blop of bad news to come out, and this thing will go under 14 quickly. That's my only fear about it. But you're in and out in hours. That's different to having it overnight.
Yeah, they're talking about it like a rogue stepchild now with no redeeming qualities, and it does have some redeeming qualities, but they're not advertising that. That's for sure.
It's going to take a little while to sort out. So good luck, Scott. Thanks for calling and letting us know about your trades.
Thank you. Bye-bye.
Thank you very much. So, folks, a couple of questions. I had the Boeing question, LMT, which is Lockheed Martin trading right now. It made a new recovery high, and I'd call this a G. I don't even know if I can call this anything but a B, and I'm calling it a B because it went to 361. Oh, another 361 open, 363 round number high, and it goes to 362.98 today, 3 days ago. Oh, I'm watching this one so closely. So Lockheed Martin looks to me like it's getting a little toppy, but it's in the area of defense. And let me tell you, defense, they keep jumping into the defense stocks. I would not even think of shorting a defense stock. However, what I am looking at, one other one, I wrote it down today and I forgot it. I said it to subscribers. It made 130. I did a whole bunch of work on it. Oh, Caterpillar. Here we go. Caterpillar is one that we're looking at. I almost got it today, but then I thought I'm going to wait a day. So on the long side, that is, it made a round number high. Is this the one? Yeah. No, it wasn't. I'm trying to think. What stock was it? But 161. That's where it was. A round number high at 161 on the 16th of February. I knew that. So let's go back to Lockheed Martin. There was a 161 high, and this made a 361 high. A 361 open and a 363 high. I'm going to be watching this. I don't know what to call it. It certainly could have an alternate count. It's Technical Friday. I don't have time for it. Maybe on Monday. Will someone remind me? I want to talk about this in the Chapman Wave Unconventional Flat Base Restart. LMT Monday. I'll put it in. Just for those of you who use Chapman Wave techniques, this is a technique that over the years we've spent a lot of time on. If you can recognize it, it can be great. I'll do it on Monday. All I can say is that if it doesn't break above the round number high of 363 that it made on the 16th by Wednesday or Thursday of next week, but instead goes below 352, watch this one very closely, and I'll talk about the technique. WMT, Bob wants to know, Walmart trading down 16 cents at 92.61. So it gaps down on bad outlook. It's made a peak D at 110, what it was really 109.98 on the 29th of January. Just stay away for now. Walmart peak D in the daily, Walmart peak D in the weekly, and an E in the monthly. Give it room because we might be looking at a hat trick top. And there's still a lot of stocks that have the potential to make hat trick tops. Sarah wants to know about HPE. I don't think I've done HPE in a very long time. HPE is Hewlett Packard. Wow, look at that gap. Must have been really good news. Gap's up to 17.97. Can't do the waveform in this briefer time. Let me just say to you that A, B, C, D, and then it gaps. I love when they fill gaps like this. Monthly, I've never seen this. It gaps down and then fills that monthly gap. Wow, that is really unusual. So I must make a note. HPE. I'll do HPE over the weekend. I'll do it on Monday. We're back to normal, my noontime hour. So that's that. Oh, XRT. Yep, I'll do the XRT. So I'll first do the RTH, which is the retail. This is the market vectors retail. This is just a balance. It hasn't been able to break above it. I'm a little concerned about that. That's telling me that I've got to watch really closely for the retail sector. At 97.11, made that all-time high at 103.87 on the 29th of January. So many stocks went between the 23rd and the 29th to major highs. I still think that this is a sideways consolidation after a low and not the low at this particular point. And I think it applies here. XRT is the retail, and there are many more retailers than I thought. Spider, S&P retail, it's the same pattern. So it went to a peak F in the daily on the 24th. Got to be careful. I don't see anything yet. I just think it's stuck in a range. I think over the next 3 months, the Macy's, the retailers, the brick retailers are going to try to find some support, and they're going to try and find a way to come through and save the day. And I think they're beginning that process. I'll be right back. Basil Chapman does up 142, S&P's up 22.
You know, you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Why is the question? Well, I think of it 45.81 right now. IBQY trading in leg, brand new leg 8 to the upside, I think. I like it very much. It's just a doji candle. It needs to hold the 44, 40, 43 area into next week. If in fact it can make a new high, that'll be really good. The monthly chart is very strong. Keep an eye on this. This is a good, very good looking stock. A couple of questions here. The transports, I think I did the IYT. No, I didn't today. The IYT just stuck in a range. I don't know why it's not moving. And it's actually holding quite well considering oil's up sharply. Remember I said be careful of crude oil. It should trade in the 63s. It's actually now moving in leg C in the 63s. This could go to the 64s, and the 50, 59, 58 area was strong support. This is a good bounce. Very nice. FDX, do that quickly. FDX is trading. Leg B, I don't know if this is a brand new move to the upside. The MACD is just about to turn positive. Let's watch this closely. It's not a great move considering where it's been, but it hit the 200 period moving average at 250, up 5. But let's do, remind me again, we'll look at it on Monday. Copper, I didn't do anything with copper. Copper is down. It's just stuck in a bit of a range. Nothing there to see. XOM. I know some of these CVX I did very nicely today. Yeah, XOM is up at $1.25, stuck in a range. I do think that XOM has made at least a short-term bottom, and there's a good chance it can go from 77 to 78 over the period. It could start to fill some of this candle, but it's really not a very great-looking pattern. If you're thinking of trading it, you could buy it here with a 1-point stop. I think it's going to go higher, at least in the short term. I think we covered everything. Quick look at the VIX index as we wrap up. Check out my opening call subscription. We're still short, actually one short that's still working very nicely. Short a home builder, and it is down sharply from when we shorted 33.5. Is trading in the 28s. The VIX is actually at 17.30. This is still holding pretty darn well. That weekly chart is above the 9-period moving average. Hey, the day's young. Let's see where the VIX ends. But I suspect the VIX is telling us there is good support in certain sectors for the next couple of weeks at least, and that we should be in a trading range. And I don't think we're going to break down just yet. That's my thinking. We'll see what happens next week. Have a wonderful week, and stay tuned. You've got Steve Rhodes, you've got Dave White, you've got Tom O'Brien, and I'll be back on Monday. Have a great week. Check out my opening call over the weekend.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.